Everyone, and welcome back. Today, we are going to break down all the market action from November 18th. And really, it was a day where everybody seemed to hit the pause button. A lot of caution out there, so we're going to unpack what was really driving that feeling. Let's jump right in.
So here's the game plan. First, we'll talk about that big theme of caution. Then we'll see exactly how that sent a chill through the stock market. After that, we'll look at where the money went to find some shelter, check out the absolutely wild ride in crypto, and then we'll wrap it all up with the biggest takeaway from the day.
Okay, so the main story today was a classic risk-off mood. Now, what does that really mean? Well, it's pretty simple. It means investors were taking a step back from assets they see as, higher risk, like stocks, and they started moving their money into things they feel are a bit safer.
Now, to be clear, this wasn't panic. Not at all. It was more about being prudent, being smart. You see, traders were kind of getting ready for two big things. First, a lot of uncertainty around what the Fed's going to do with interest rates. And second, they were getting positioned just before some major companies released their earnings reports. So it all just created this broad feeling of, let's just play it safe today.
So how did this play-it-safe attitude actually affect the stock market? Well, as you can probably guess, the major indices definitely felt a bit of a chill. Let's take a look at the actual numbers.
And yeah, it was red across the board. The S&P 500, it closed down about 0.9%. The Dow Jones took a slightly bigger hit, dropping 1.1%. And the tech-heavy Nasdaq, it was also down by about 1%. And even though these aren't massive losses, it's still the fourth day in a row that the S&P 500 has gone down.
This chart really gives you a good visual of what happened. You can see the Dow, which is full of those big established companies, it felt the most pressure today, dropping by about 500 points. On the other hand, tech stocks over on the Nasdaq, well, they were also down, but they had a little bit of a recovery late in the day, which kind of softened the blow for them. But hey, not everything was in the red. When investors get cautious, they start looking for shelter. So let's talk about where the money was actually flowing into and see how those safe haven assets held up.
And this is a perfect illustration of that rotation. On one side, you've got crude oil, which dipped a little bit as those worries about the economy started to creep in. But on the other side, you've got precious metals, gold and silver, seeing really strong demand. This is a textbook flight to safety.
Gold's performance was really the standout story here. I mean, it dipped during the day for sure, but it fought its way back to close strong at around $4,050 an ounce. Holding that $4,000 level, that is a huge psychological line in the sand. It just shows that investors were actively using it to protect their money.
All right, now let's switch gears to crypto, because the story here was, well, it was a lot more complicated. It wasn't just a simple case of stocks are down, safe stuff is up. The world of digital assets had its own pretty wild and divided story today.
The two giants of the crypto world really went in different directions. You had Bitcoin, which got hit with some pretty serious selling pressure during the day before it managed to claw some of that back. But Ethereum, that was a totally different story. It showed some pretty remarkable strength, especially compared to everything else.
So what was going on here? Well, Bitcoin actually plunged below $90,000 at one point. That's its lowest level since the spring. It did manage to bounce back into the low 90s, but Ethereum, while it dipped, it recovered really quickly and held strong above that $3,000 mark. It was just clearly the outperformer today.
Okay, so we've looked at stocks, we've seen what happened with commodities, and we've dived into the crypto chaos. Now, let's try to pull all of these different threads together and figure out what the big picture from today really is.
When you really boil it all down, three things stand out. First, that general sense of caution hit U.S. stocks pretty much across the board. Second, the classic safe havens like gold and silver, they did exactly what they're supposed to do when people get nervous. And third, the crypto market is showing some really interesting splits, with Ethereum showing a kind of resilience that Bitcoin just didn't have today.
And all of this leads us to the final and most important question. Was today just a blip, a one-off day of cautious trading, or are we seeing the very first signs of a much bigger shift in how investors are feeling about the market? That's what we're all going to be watching for in the days ahead. Thanks for joining me for this breakdown.